Let's talk about a big ET now exclusive, and this is to do with the mutual fund crisis and the liquidity crisis that we've been seeing. SEBI, the market regulator, could soon step in to rein in the current debt mutual fund crisis. That's after Kotak and HDFC mutual funds rolled over their fixed maturity plans. This is to do also with the Anil Dhirubhai Ambani Group companies. SEBI is set to come out with stricter guidelines to protect retail investors and all kinds of investors for that matter. Ruchi Bhatia joining us with that story. Ruchi, this is very crucial. Market regulator clearly taking cognizance of the rollover, the redemptions, etc., the fixed maturity plans. What can we expect next? What kind of guidelines are we talking about, and how soon will they be issued?
Market regulator SEBI is all set to act decisively against a recent string of mutual fund defaults as well as the share pledge issues. We're given to understand that SEBI is working with stricter norms and guidelines that will ensure that investor money is protected and debt mutual funds do not act like banks. We're given to understand that SEBI is working on a string of directives that will ensure that reckless lending is not done by mutual funds, and if at all they park their money in risk-based assets, then it should be reflected in the NAV so that investors can park their money safely and can make a wise choice. We're given to understand as a part of the directives, SEBI will ensure that they limit the exposure in debt mutual funds in debt securities of a single company. They will also ensure that the line of extension that is given by mutual funds to companies is limited, is reduced. So this is going to be an important game changer. We're also picking up that SEBI will ensure that once a collateral is given by a certain company to a debt mutual fund, it is a clean collateral that can be monetized. They will ensure that collateral should not be given by companies via complex structures which cannot be monetized if in case of a default. So stricter guidelines coming in. We're given to understand that after the elections, SEBI will look to rein in debt mutual funds that are acting like banks, and this of course has happened after we have seen how Kotak AMC and HDFC AMC had rolled over some of the payments of the fixed maturity plans that they were supposed to give to investors after they had lent to various organizations that were not able to repay their loans in time.
That's the big ET now exclusive. All eyes on the market regulator clearly swinging into action, taking cognizance of the mutual fund crisis that has unfolded and limit exposure, protect investors. Thanks, Ruchi, for joining us with that.